Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Andrew has a question about stockpiling commodities. Why can't China just continue, instead of buying, or maybe to a lesser extent buying U.S. Treasuries, just continue to buy commodities? I mean, many have been saying that they've been doing that for the last couple of years. Why don't they just take some of their cash and continue to do this into perpetuity? Or is that the problem, is that they're not going to get the cash from the other countries like the U.S.? Is that the problem?
Well, to a degree, they are doing that. If you look, obviously people believe that they've stockpiled a lot of copper and bought some gold and obviously bought a lot of oil. And if you look at their investments, strategic investments overseas into Africa, very, very deep in expanding investments in Africa, that basically is making a long-term investment in commodities there. So they continue to spend a great deal of money on commodities on a regular basis. One of the problems, and I would say it's very smart of them to use their money that way, given the relative price of the commodities now compared to where they've been. They're probably getting a bargain if you believe commodities are in a long-term bull market. But I think near term, a lot of the money that they spend in commodities, if we don't see a rebound in global demand, will end up, again, near term, to lead to a real fall in commodities prices. I think because the stockpiling has created some artificial demand, again, near term. But long term, given China's view, as we know, China plays on a chessboard very, very long term, a lot of moves ahead. So for them, as much money as they spend on commodities now and as much demand as they have, it makes imminent sense for them.
This is not necessarily as much a question as just a comment. Joseph says that you gave an incredible presentation. You need to get the story out to everyone. So how do we participate? Do you offer advisory services? Well, I think I just mentioned the Currency Currents is free. So you can go right to Jack's site and get his daily free global macro commentary. I think if you like that, then sort of the next natural step would be to quite possibly, if you're so inclined to buy the Currency Strategist, then you can go to Jack's website, blackswantrading.com, to learn more about that, Joseph. So I think that, of course, Jack likes the kind comments, but I don't think a lot of people are getting this. Yeah, not a lot of people aren't getting this word out. It seems the idea of how this is really working. So, I mean,
I think I can answer some of that. We watch the press, and the financial press seems to fall all over China. And part of that is because they know if they say something negative about China, they're going to be blackballed. Getting inside China and getting access to some of this stuff. So a lot of the press that we see is very jaundiced because China will very quickly crack down on major press groups if they say anything negative, and that's part of the power of China. The propaganda works very, very well because they follow it up with an iron fist. And also you have so many cheerleaders for China that have a lot of investments in emerging markets, emerging market currencies, and mutual funds. And because China is the big dog and the big driver, a lot of the investment managers around the world want this game to continue, and they're not going to say anything, to rock the boat, so to speak. You know how that goes. They don't want to let the potential bad news out. They want more and more investors in their funds. And the reality is we may be completely wrong on this, but we see some major, major risk in the world because of these pressures. And we have no alliance with anybody. We're completely independent, and we can say it. I know I will never be allowed back in China, probably given the stuff I've written about them. I've written some pretty edgy stuff. In fact, I had some stuff posted on the homepage at the time of the Falun Gong in China, which didn't make me real comfortable. They're a major Christian dissident group in China. So, but I don't ever really want to go back to China, so it doesn't bother me. But there's a real vested interest to say a lot of good things about China, given the power of a lot of money there. And also, you got to think of it this way: both parties in the U.S. have a lot of deep. The real powerful people in the U.S. have a lot of deep real asset investments in China. That's why they continue to spout this mantra that all this stuff is free trade when it's ridiculously not free trade. So when you have that type of power elite behind this game, it's very, very, very hard to buck it. So that's why the word, really another reason the word doesn't get out. If you start talking about this stuff, you're kind of, written off as a nutcase if you get too strident with it. So I think that's why we don't see much of it.
Thanks, Jack. Andrew has a point, and he says that his view, major advantage of options is profit in a non-directional market. Where's the scope for those strategies? And in a couple of weeks, we're going to the IAC will be bringing on Mike Tusaw, and he'll be talking about iron condors and trading that. So, again, options give investors the ability to do a lot of different things. Number one, the simplest way is just limited risk, and sometimes I like to say the simplest is the best. But yes, there are lots of ways to trade these, Andrew, and stay tuned as we'll be bringing on special guests that talk about. In fact, yesterday we had a guest talking about credit spreads, and then at the end they talked about the idea of the iron condor, the non-directional trade. So yeah, if you believe that the markets were going to stay sort of in a holding pattern, yes, you could find these non-directional trades. If Jack's right, though, and we're not in a holding pattern, those trades won't work out at all. In fact, they'll probably act very poorly. They'll perform poorly. So, yeah, that's up to you. Let's see. Eo wants to know, since the graph of the BPX is declining, that means, yes, that the dollar, the U.S. dollar is becoming weaker, so the British pound is increasing. That's exactly right, Eo, that all of these options, when you look at the charts, when you see a decline, that means it's a decline relative to the dollar, means that the opposing currency is strengthening. When you see a stable sort of chart like we see with the dollar against the yen, we're really going nowhere. Also dollar-euro, basically those two haven't moved that much, but the commodity currencies have definitely moved quite a bit, and you see, and even in the British pound. So I hope that helps.
Steve, I'm going to post that. Go ahead and post that blog site that I talked about with Professor Pettis. He's a professor at Peking University. Hopefully that works.
That's great. Just put that up. Joseph has a question. He says he uses one of the brokers. Can he trade the IAC FX options through the broker? Yes. And if you think about it, you can trade this through Options Express. You can trade this through Thinkorswim. You can trade this through E-Trade, through Charles Schwab, Trade King, Interactive Brokers. Just about every broker, you can trade this. TD Ameritrade, you can do, at every broker, they'll have this. So, Joseph, not a problem. You just have to type in the symbols that, I'll just put those right back up again. Let's see.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.